talking of settling, Sridhar is now settling in his chair in our studios.
Thanks for inviting me.
He's got wanderlust. We all know that. Like Sridhar is one of the
Tiger lust.
tiger lust, wanderlust. Always when he comes back, he's back from some trip or the other. This one is from my neighborhood of hometown UP, right? You've been back from checking out the rural areas. And of course, Jim Corbett is what where you went?
Yeah, I went to Dudhwa.
Dudhwa, right.
It's actually in UP.
So how was your luck?
Kheri is the
Lakhimpur
district.
Kheri.
Yeah.
At one point in time used to be the the bandit area of UP. But
That's
now
right.
have things changed in the rural side?
No, so actually I went pre the election results and the ground feedback was similar to the results, but I don't think anybody would have got, the feedback we got was about 10 to 15 seats lesser in UP than what they got the previous time, more because of the selection of candidates. Lakhimpur Kheri itself, is a controversial constituency because of the person who was standing there. So I guess
But what were the areas? What were the areas of the focus which the people on ground wanted? Because there is rural stress, tier 2, tier 3 has been hit, and now acknowledgement coming in from almost every quarter. That's why the expectations are getting built in that rural will be addressed, right, in the budget.
I think inflation was one of the concerns. The other thing, I think to a large extent, was the candidate selection, which was what coming in various constituencies, that the candidate selection, people were unhappy because they were sitting MPs and hadn't done enough. And of course the chemistry and mathematics of cycle and hand was working quite well. So I would say that's the feedback that I could get. So we were reasonably sure that the exit polls wouldn't come through.
So did you raise your cash level that day?
Honestly, it doesn't matter, no, because even if suppose we raised cash by 10%, 90% is still invested. So it's more intellectual
kind of a kick,
argument.
But otherwise it doesn't matter much.
But we were there to buy on the day of the results. Because you knew that the same the government is coming back in some form or the other, and honestly it didn't matter after a point.
But handsomely rewarded people who bought that day.
Yeah, but as I said, it didn't matter so much,
but
because
even
90%,
if you didn't buy,
you were
you're
already
sitting
invested.
on good gains since then.
So you were already invested, and the markets have anyway gone up, so it didn't matter much.
But now what? Do you think much of the good is already priced in? All the 100-day agendas, defense. I know the stocks are still moving up, but do you think a large part of the rally for the year is behind us?
So I think my view is that the large caps still look okay. If I take the last 5 years, earnings CAGR is roughly 17-18%, and you look at the Nifty CAGR for 5 years, it's roughly the same level. So I think the large caps look fine. The problem is when you go to mid cap and small cap, their 5-year CAGR is 30%, and earnings haven't tracked there. So they've had a significant re-rating. We do think that earnings will decelerate from here on. Because the tailwinds that we had is now to some extent becoming a headwind. It's not a significant deceleration, but we can't continue this 18%. So we think it will be closer to 10-12%, at least for the next 1.5 years, the earnings growth. So our view is that the large caps look far more safer right now. Having said that, we will not be surprised if there is a correction. We've seen such market movements in the past. And only flows cannot take markets up. Stocks are slaves of the earnings. So if earnings don't follow through, then it will show up in some form or the other. The budget could also be a key point to look at, because I think everybody, including SEBI, Reserve Bank and the Finance Ministry, is worried about the options and futures volumes. And I won't be surprised if something in that comes which can dampen the volumes and the sentiments in the market. We don't know in what way, what form, but I think every interview you see somebody or other talking about it.
Do you think that this time around, since we're talking about the budget, that the rising populism as well is going to raise questions on the government's budget?
See, I think they have 1 lakh crore extra from the Reserve Bank. I don't think they move from the fiscal deficit target of 5.1. I think they are also committed to 4.5 fiscal deficit for next year. So I'll be very surprised if they make any changes as far as fiscal deficit is concerned. Given that they have 1 lakh more, 1 lakh crore more, we could see some populism, because there have been a criticism that consumption has been weak. And the government hasn't addressed that very well, or the finance ministry in the budget hasn't addressed it very well. We could see some bit of reduction in taxation for the middle class. There could be some schemes for subsidy or something of that sort. We'll have to wait and see, but that's highly possible. They have 1 lakh crore extra.
So, assuming all the assumptions that you just made about the budget, about the valuation concern as well for the SMIDs, how is it that you adjust your short-term portfolio and your long-term portfolio?
So, I think the way we look at our portfolios, we'll have stocks where our earnings expectations or our probability that our earnings visibility is very high. Those are the type of stocks we'll keep. Now, in some cases, if there are, say, mid-cap stocks, it's highly possible that they've reached territories which are not fair at this point of time, but it's very difficult for our size to move in and out. So, we would stay put. But in cases where we think it's extreme bubble territory, then we would exit. I mean, PSUs is a classic example. I mean, we were the early bulls of PSUs right from, late 2020. And I was very vocal in saying that you should just buy a PSU, mutual fund. I mean, that's the best way of playing. Stocks which were trading at 5 PE now, or 5 or 10 PE, are now trading at 5 and 10 revenue. So I think we've crossed the line of, fair value. And does it mean that this trade ends? No. I mean, when you have a particular theme that works, you normally go from deep value to fair value, overvalue, bubble territory, and then anything.
But you trimmed your position in some places, right?
Very much, yes.
So which are the areas you have trimmed your positions in?
I mean, I will not get into specifics,
Names,
but
themes,
in PSUs in general, we have trimmed up positions.
Power financiers or banks, or is it defense?
See,
or
the banks,
railway?
I would say that we were PSU dominated. Now, I'm not saying all the PSUs don't have value. In fact, you can still find PSUs with 20% ROE and 1.1 book, which still looks reasonable. But there are others which have gone far ahead than where they should. And the private sector financials are looking far better right now, given that they haven't performed. So obviously, we made some switches here and there.
So when you say that you find more value in large cap pocket, which are the themes in large cap which you like? Is it telecom? Is it anything else?
Telecom is something that we've been bullish for a while, and the rough numbers based on the ARPUs that have gone up is that the industry revenues can go up by about 40-50,000 crore. Now that goes straight into the EBITDA. Even if you take a 10 times EV EBITDA, that's 5 lakh crores of extra market cap for the industry. Then you can figure out how you want to allocate between the three players. But that gives you a reasonable, leeway to play around with that. We think ARPUs will continue to move up, given that they've been flat for multiple years now. So that's the secular theme that we like. Financials I already spoke about. Power and power equipment is something that we really like, because we think that in the wind and in solar, we could see doubling of capacity in the next 3-4 years. Wind from some about 40 gigawatts to around 80, and in solar from about 70 to say about 200. Same is with thermal, that we could see an addition of 40-50 gigawatts in the next few years. And this brings a huge opportunity for the power equipment players. Having said that, I have to also warn that power equipment companies have really gone through the roof. And obviously, at this stage, they look very expensive. But they could show 40-50% earnings growth over the next few years.
So when you say power equipment, you mean the most obvious larger candidates, or you're going a step deeper as well? Similar for renewables and solar, there are only 2-3 companies there.
Yeah. So I think in wind, the number of players are far lesser.
Yeah,
so the opportunity size will be split between a few players. So that looks quite exciting if the number of players are less. In solar, the number of players are far more. So the opportunity is going to get split between a number of players there. But in power equipment, I think at the end of the day, if you generate power, it has to be transmitted, it has to be distributed. So the entire T&D play, your transformers, the entire ecosystem starts to buzz. And recently one of the companies suggested that for the current year they'll have 400 basis points of EBITDA margin improvement from 10 to 14 in 1 year.
Because of debt reduction, right?
No, this is the EBITDA margin improvement because of the fresh orders.
Fresh orders.
I mean, those are not things that you normally see where, power equipment company coming and saying that, your margins are going to improve by 400 basis points. So obviously this space is very exciting. Having said that, as I mentioned, that the valuations have also gone up. So one has to be cautious. But earnings are going to be very strong.
That's interesting. The last time that we spoke with you, you were also talking about within manufacturing, of course, auto ancillaries, and you talked about some chemical companies as well. Does that call still hold?
It stays. So I think especially in chemicals and in auto ancillary, it's no longer China plus one, it's also Europe plus one. So number of European companies, especially in the chemical side, you're getting a lot of orders even on the auto ancillary side, which is coming from the European companies because of the own challenges that Europe is facing. So I think this is a space where there is a lot of opportunity and it is very stock specific. So you cannot say that this is true for the entire segment. Chemicals have their own set of challenges because of what is happening from China, the dumping that we've seen in the last 1 year. But we think that a lot of it is turning around now. So that entire space remains. I think manufacturing is going to be a space to watch at least for the next 5 years. We focus a lot on services. And I think services have their own set of challenges. I think manufacturing will surely, take over from here. I mean, just look at Apple as an example. I mean, their ambition of 100 billion exports from India over the next 3-4 years, and they're at what 10 billion today. Even if you assume that 80% is imported, at least 20% is going to be manufactured here, and over a period, the indigenization of that entire process will ensure that we have more and more manufacturing in India. So
But since you talked about chemicals much like pharma, right? Each company is different than the other.
Yeah.
So what within chemicals do you bet on? And is it the obvious larger players or do you look for something
I think
niche?
it is the larger players because they have the advantage of scale. So if you get a large order from say any European company, you're in position to execute
Supply,
put up new capacity. So at this stage, we are more bullish on the larger chemicals.
What about auto ancillary? I mean, I was just looking at Maruti was gaining 5%. 5% in trade in a matter of 5 minutes of market opening because there's a change in policy. So when we go for auto ancillary, one is the EV end of the business which is coming and then the ICE. People are saying that there is so much focus on EV side that people have forgotten that ICE companies are not going away in a hurry. Are you going in any of the legacy companies or only EV based?
I would tend to agree that today there is a fad in the market that
Towards
anything related to EV and the stocks just go up. But just keep in mind that very difficult to make actual money when you're producing EVs today as an auto company. Because you're dependent on subsidies and the volumes have still not reached the level that one should. And just look at Maruti or Suzuki in general, that they are more looking at hybrid than EVs, even though they are present in EVs, but their focus is more on EVs. I think this technology is changing, evolving. It's very difficult to say that ICE is dead and EV is the future. We don't even know what the future is. So if the valuations and the matrix don't add up, I really don't care whether it is EV or it is ICE or whatever. There has to be some method in the madness. I mean, we are slightly old school, but I think it works over a period of time.
Yeah, and speaking of all of that, there's also been a lot of interest when it comes to IPOs or a gush of IPOs. Are there any specific themes or types of businesses that you'd look at?
So I think the extra supply that we are getting right now is great for the market because the market's at a very, you would say it's priced to perfection. And at this stage, if we are seeing selling from MNCs, promoters, from private equity, new IPOs coming. So I think this brings equilibrium because the demand for paper is very high right now. I mean, we look at individual companies, so we're really not bothered about, what particular theme it is. If it makes sense, we would. I mean, in 2001, we skipped all the new age technology companies or the companies which were technology oriented because the valuation didn't make sense. Having said that, a lot of it has changed now, where these companies are now talking of path to profitability from where they were only burning cash. So I think it's that's how we look at. I mean, there has to be some sense in the valuation.
Okay. So where's the next trip? And is monsoon a good time to spot big cats?
No, monsoon is not a good time. So
Yeah.
this is the time you look for, other trekking options and things like that.
All right, Sridhar, we'll let you go on that one. Thanks
you
so
very
much for dropping by.
Thank you very much.
All right, so that was Sridhar Sivaram of Enam, but let's move on. And
If you like this video, then like, share and subscribe to ET Now.